quit. Purchase an EV later on, there's going to be a big EV market meltdown. Recently, automakers unintentionally released a startling update on the EV industry that reveals the murky reality of this EV scan. Even though there are thousands of new electric cars accumulating on dealer showrooms, consumers are giving up on EVs. No one is rushing to purchase them. All manufacturers have agreed to investing a staggering $616 billion on electric vehicle EV research and development by 2030. Additionally, around 1 million EVs were made and delivered to dealer lots only this year. However, something unexpected that nobody had anticipated occurred. Come along with me as I tell you everything about the catastrophic EV market collapse that might bring down every EV manufacturer, setting off one of the largest car tragedies historically. You might be harmed by this accident even if you don't own an EV. You may believe you understand what's happening, but in reality, you don't. So this is precisely what happened. The cost of electric vehicles will drop by almost half when the industry as a whole implodes. This is not the moment to purchase an electric vehicle ever, whether new or old. Despite spending billions developing EVs, companies like Ford, GM, and Tesla are seeing a decline in sales. The pace at which EVs are sold in the US has decreased. It now takes almost twice as long to sell an EV as it did in November of last year. Even while the majority of consumers still believe that electric vehicles, EVs, will replace combustion engines in the future, many are still skeptical because of the high cost and short range of the current models, particularly the entry-level models. Two major obstacles that may be mentioned are range anxiety and a lack of public charging facilities. The typical customer is reluctant to switch entirely to electric vehicles, especially when traveling long distances where finding charging stations needs careful preparation. But contrary to popular belief, the true cause is darker. With a risky tactic that no one is discussing, China is in control of the American electric vehicle fleet. However, more on that in a few minutes. This mood is reflected in the market. EVs spend 9,100 days at dealership lots, which is a very different amount of time than the average 52 days spent by internal combustion engine cars. By 2023, just 67 of us purchasers have given an EV any thought, down from 86 in 2021. Another obstacle is the cost of EVs. The luxury EV market hasn't suffered as big of a slump, which may be due to the fact that they are often more expensive than their gasoline-powered rivals. Affluent consumers are less impacted by price increases. Even though it is the only US automaker with a viable EV business, Tesla, the pioneer in the EV industry, has not been immune to this slowdown. This year, the company has had to make severe price cuts of up to 30% in order to maintain its volume of sales. When he revealed last week that he was delaying plans for a factory in Mexico, Tesla CEO Elon Musk alarmed the public. During Tesla's earnings conference call, he expressed concern about the current high interest rate environment, stating it is important to note that most people who purchase cars do so primarily for the monthly payment. It will be far more difficult for consumers to purchase cars if loan rates stay high or rise anymore. Companies have together committed to investing around $100 billion North America alone to build electric vehicles targeted at both the general market and premium consumers. However, reaching this goal is becoming harder and harder as the economy continues to compress these cars of affordability. For example, the starting price of Ford's F-150 Lightning is around $50,000, which is much more than the $37,000 of its gasoline-powered cousin. The electric version of General Motors Company's Chevy Blazer, which starts at $56,000 instead of $37,000 for the gasoline vehicle, also experiences a significant price increase. The costly batteries that EVs run on are the primary cause of their increased pricing. According to Bloomberg NEF research, it may take another 3 years for the costs of internal combustion engines and EV batteries to coincide. The rapid decline in automotive revenue growth, which was 51 in the previous year and just 5 in the third quarter of this year, is a result of Tesla's aggressive price cuts. Additionally, the company's automotive gross margin decreased, hitting a record low of 16.3% for the quarter, its lowest level in more than 4 years. Major manufacturers are delaying their ambitions for growth as they deal with this difficult situation. Elon Musk, the CEO of Tesla, made a hint about delaying a new $1 billion plan in Mexico. GM has postponed its intentions to increase the production of electric pickup trucks in the Detroit suburbs, moving the launch date from the originally scheduled year of 2025 to late 2025. Ford Motor Company is reducing its planned expenditures in electric vehicles as well, postponing $12 billion of its $15 billion total. The financials reflect these deliberate retreats. Ford's Model E electric car division had an operational loss of $1.03 billion. The most recent quarter and projects an EV loss of $4.5 billion this year. They are now losing around $36,000 on each EV they sell. This is evident for Ford in the sales of their Mustang Mach-E, which fell by 53 in October 2023 on a month-over-month basis. Although Ford sales records were previously boosted by the Mach-E, the corporation is now lowering the vehicle's output. Sales of the Mustang Mach-E plummeted to 2,732 from a peak of 5,872 in September. Through October, Ford's total EV sales rose by 12.6%, above the 6.8% rise of ICE cars. These numbers, however, were not as high as hybrid car sales, which increased by 18.8%. Ford unveiled a new flash variant for the 2024 F-150 Lightning in response to the changing market conditions. This trim offers a tech-loaded cabin and a 320-mile range for less than $70,000. But once again, the primary cause of Ford's demise is its exorbitant sticker tag. Everyone was taken aback by their decision to cease producing the F-150 Lightning, particularly because their Coated Island facility had just undergone a retooling to increase productivity. In the third quarter, Ford's EV sales reached a record-breaking 70% of all EV sales. Along with the production reduction, Ford is postponing large EV-related expenditures. An additional $12 billion in EV expenditure has been delayed due to the postponement of a second battery factory in Kentucky in collaboration with CN. Similar difficulties are being faced by GM, which recently declared that the manufacture of the Equinox Silverado Rust and GMC Sierra Denali EVs will be delayed. Production of the electrified Chevy Silverado and GMC Sierra will now begin at the Orion Assembly Facility in suburban Detroit by the end of 2025, 1 year later than originally scheduled. GM attributed the delay to the necessity to control capital expenditures and adjust to the changing market for electric vehicles. Executives at Mercedes-Benz have also voiced worries about the future of the EV sector. Top leaders from all three businesses have emphasized the difficulties facing the EV industry in recent speeches. During the company's third-quarter results call, Jim Farley, the CEO of Ford, highlighted the challenges facing the EV industry, saying, "It's been a challenging situation for sure. Individuals are unwilling to pay what we had anticipated." Farley brought attention to the sobering fact that competitive prices are now essential, and that a fantastic product is no longer sufficient. He also emphasized the problem of consumer affordability with regard to EVs. The average cost of a car transaction in the United States in September 2023 was around $48,000, while purchasers had to pay between $53,000 and $60,000. However, did you know that there is a sinister reason why US manufacturers can't offer electric vehicles? The problem is that China controls over 80% of the supply of EV batteries. And China will never have this, even if America is making efforts to become self-sufficient in this area. They were the primary cause of the 2021 worldwide semiconductor shortfall, which resulted in severe shortages despite high demand. As a result, everyone believed that electric vehicles (EVs) were the greatest option available, and automakers began pouring billions of dollars into Chinese EV suppliers. But people didn't grasp how dire things were until the autos were eventually released into the market. Right now, no one is purchasing. Brands have begun to drastically reduce their pricing. According to Bloomberg NEF, the average cost of a battery electric car will decrease by 13% in 2023 to around $33,300. The falling cost of batteries, which is anticipated to reach a tipping point for widespread EV adoption by 2023, is what is driving this. Analysts have cautioned against making hasty auto purchases due to the current buyer's market conditions, citing the likelihood of more price reductions in the next months, compared to former times when buyers had to pay higher prices and bear heavier weights for new cars, especially electric vehicles. This is a radical change. However, given the impending crisis, it would be preferable if you could postpone purchasing an EV until at least the second quarter of 2024. EV producers have a difficult path ahead of them. it is crucial to strike a balance between affordability and profitability. Economic reasons will likely affect the future of the electric vehicle AV sector just as much as technology advancements will, as manufacturers adapt their strategies to the shifting market circumstances. Purchasing these exorbitant EVs at this time is definitely not a smart move. Alternatively, sticking with pure ICE or hybrid cars may save tens of thousands of dollars and prevent the collapse of the EV industry. Do you believe that EVs will soon be reasonably priced? Tell me in the comments section below.